I really like the pivot levels, and the pivot levels are really no secret at all. Everybody knows what the pivots are. But what I found is that most people don't play them correctly, and this is what they do. I mean, first of all, you can see how, especially like the daily pivot right here, I mean, the market really respected these levels and didn't go through them at all. But what happens, and the mistake that most people make, like say playing pivots, and let's go back over here and look at this, the daily pivot right here, is, and what I've seen is what will happen is a market, like say right here, will come up and test a pivot level, and the majority of traders will sit there and they'll see the pivot level, and then they're going to wait for multiple levels of indicator-based confirmation before they get into the trade. So they might say, okay, I'm going to wait for the 8 and the 21 EMA to cross over, and then I'm going to wait for these things, and then I'm going to short it. Okay, so here we've rallied up to the pivot level. Now I'm short right here, okay, and I'm using a tight stop. I've got up my 10-point stop on, and we rally up 10 points, they get stopped out, and then the market continues to go lower. I mean, does that happen to anybody here in the room? Y'all, if you're not raising your hand, you're just a liar, but that's okay. So, what my
50 takes me out, and then we go.
yeah, that works too. So what I like to do with the pivots, and the reason I like the pivots is because I'm using the pivots to get in before all of the indicator-based traders. All right. So on something like this, if we're rallying up to the daily pivot, and I'll tell you my rules for when and how and why I would actually short this. I've got a short order here, and I always go, and this is for the Dow, okay? For the short, I'm going to go 3 ticks in front of the pivot level. So if the pivot's at 12,185, then I'm going to short at 12,182, right? 3 points in front of the pivot level. And I'm not going to wait for any confirmation at all. I just throw my order out there. So here we go. The market screams up into this pivot level. I'm short. And now what will happen here is there's obviously a couple of things that could happen here. I mean, we could blow through the pivot level, and I'll be stopped out. And that does happen once in a while. But usually on the first test of a pivot level, okay, and that's kind of a key thing there, the first test of a pivot level, you're going to get some retracement and you're going to get some selling that steps in. So I'll go in, and then with the Dow, what I start off with a 20-point stop, and if that was the S&Ps, the equivalent would be a 2-point stop. And then if I get up 5 points on the first third, or if I get up 5 points, then I'm going to take a third off. Okay, I'm going to cover a third. I'm going to move my stop from 20 to 10. All right. And now down here I'm up 10 points. I'm taking off 2/3, and I'm moving my stop to break even. So I'm getting out of 2/3 of my position. By the time I'm out of 2/3 of my position, most of the indicator-based traders are now just getting in the position. Okay. And you remember, and again, most of the time it's like, wow, I got confirmation right here. Now I'm entering the trade. Well, I'm already out of 2/3. So it's something to remember is that a lot of times when you're just focusing on specific indicators like that, when you're actually getting into the trade, you're actually providing liquidity for somebody like me who's already in, and I'm looking to get out. Okay, so I'm looking to sell 2/3 here, and you're looking to get short because you got confirmation. So I'm getting out of my 2/3, and you're initiating a position, right? So it's the long story short of that is that you want to have. I mean, part of the reason people won't do this is because it's scary. I mean, it's like you don't know. I mean. That's a question I get is, well, how do you know that that one's going to work out? Okay, you don't, but you can assess your risk, the risk that you're willing to take. So any questions on that overall kind of a setup and things like that?
I'm sorry, John, where would you get your pivot levels from? I'm sorry.
Oh, okay. The question is just where do I get my pivot levels? I just use a basic formula, just the high-low close divided by 3. So you take the high-low close of the previous day, divide it by 3. It's just, it's a standard formula. What I do is now, and this is, again, for day trading like the Dow or the S&P, the first thing is I'm waiting for the cash markets to open. Okay, even though the Dow and the S&P are trading before, the cash markets open at 9:30 Eastern. Okay, so I'm not taking any pivot trades before that. The second thing is you don't have to really wait for any length of time. But what I'm doing is I'm waiting for a test of either the central pivot, which is right here, the yellow line, or R1, okay, which is the first overhead resistance level on the pivots, or S1, which is the first support level, right? Those three on the first test of the pivot have the highest probability of the day of at least retracing some of that move. Okay? Even if you're having like a blowout market day, generally those will meet some resistance. Now, the second test of those levels is okay, but the probabilities go down a little bit. Okay? Now maybe the first test would be like an 80% probability that it's going to roll over and it's going to work out. The second test might be like 70%. So I'm only interested in the first test of the daily pivot, the first test of S1, and the first test of R1. So how many trading opportunities does that provide me? How many? This is the part where there's audience participation. Okay, so there's 3 levels, but there's 6 opportunities to trade. Okay, because you can short the first test of this pivot level, and then if it comes back and then rallies through it, then you can buy the first pullback to that pivot level. Okay, so you faded the first test on this side. All right, and then you can also, if it does break through, you can buy the pullback there. All right, so you're looking at the first test on either side of the pivot. So you have the potential of 6 trading setups every day just by following the pivots. The way I do this, just so you guys can follow this, for the Dow, let's do the YM first. So 20-point stop. First target is +5, and then if that's hit, move stop to 10 points. This is how I typically create my presentations live. Second target is +10, and if that's hit, move stop to break even. One of the good things about writing a book is you learn how to type. You're forced to. And then the third target is discretionary. Okay, and we'll talk about discretionary exits. Now, if you're doing that same thing on the S&P, it's 2-point stop. Okay, 2-point stop. And then 5 points on the Dow, and like 10 points on the Dow is about a point on the S&Ps. Okay, so then you'd have half point, 1 point, and then discretionary. Okay, does that make sense?